Good afternoon and welcome to the CLEANTECH Lithium PLC investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in your right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and will publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Daniel Fox-Davis, Managing Director at Fox-Davis Capital. Good afternoon, sir.
Afternoon, Mark, and thank you, as always. Steve, it's been a while. How are you?
I'm very well. We had a very interesting few weeks in Australia, a long trip back, 1 day of recovery, but we're now very much back in action.
I have to say, you're recovering slightly better than me. So yes, it's been a while. We've been a bit quiet, but obviously we've been out in Australia together. We were out in Sydney and Melbourne and Perth. And obviously the purpose of today is to put out the announcement that we've now lodged the prospectus for the ASX listing. I think probably obviously that's going to be the highlight of the interest of everybody today. And then we will flip through and give a little update on where things are operationally. And how we did on our last RNS. And we've also had a couple of requests for an update about the current status of the search for the new CEO. But we've been trailing for a while, Steve, that we'd go on to the ASX. And as I'll leave you to go through, we had a extremely strong reaction and support from a number of Australian institutions. And obviously this current ASX is being cornerstoned by our current largest and longest standing shareholder, Regal Funds, who will be participating for 15%. But do you maybe just want to go back over what the purpose was coming back onto the ASX and why we think it's going to be beneficial and the sort of reaction we've been having about the relative value and how we would fit into the universe of other lithium companies on the Australian market?
Yeah, sure. I think we've been talking about the ASX for quite a time now. Regal Funds have been very strong in their views that we really should be dual listed on the ASX, and it's a market that has a great understanding for natural resource stocks. There's a deep pool of finance available now for good stories in the natural resource space. Now that's why there are 31 lithium companies now listed on the ASX, and they've been very successful in the last couple of years. Obviously, the price has come down in the past year, but there's a great understanding of the lithium business there. And there's many funds which want to invest in good projects, but they're only able to invest on the ASX and not outside. So we determined to start the process. Last year we had a few delays, but we have got there now. Obviously, the paperwork in the whole process was quite daunting, but we are there. The prospectus is lodged. It goes into its review period, and we are engaging with potential investors there. But we had many meetings with brokers and funds and analysts to talk about the CleanTech lithium story, and we had a very positive reception. There's a good understanding that we're very different to the general lithium projects in Australia. Virtually all of them are sort of hard rock mining, make a 5% concentrate, ship it with 95% waste to China for conversion to lithium hydroxide, and then to enter the battery supply chain. So high carbon intensity, and has to go through China to enter the market. And there's clearly geopolitical concerns in the US and the EU with the dominance of China in that supply chain. And here we are with our lithium brine projects in Chile, a portfolio of projects in a country that's a mining country with a very strong lithium industry already, with a lot of expertise in the area. We're going to be producing green, sustainable lithium, low carbon footprint, because we use renewable energy at the bottom of the cost curve in the lowest quartile, with good access into the United States, with the FTA agreement, where the US will have to get IRA compliant materials going into their batteries, and Chile is an FTA country. And similarly in the EU, there's a preferential trade agreement between Chile and EU countries, and the EU really wants to get better security in its supply chain, but they want sustainable minerals going into their supply chain. And here we are in a stable mining country producing green lithium. So I think it's a very good story, which sold very, very well to the people that we met in Australia, and they see it's a good opportunity to diversify their investments away from the standard hard rock going to China into a company that's got low cost, sustainable production, producing direct battery grade lithium carbonate into the United States and EU without the necessity of going through China. So people understand that geopolitics are also very favorable for us.
So if I can, just to add to that, if I may, Steve, obviously we started this process a while ago, and it was really in part driven by the relative valuations that we saw. It was in part driven by our largest institutional shareholder, Regal Funds, had us in a side pocket fund. They're now about something in the region of about $15 billion Australian, so about £7.5 billion. And they'd expressed their interest in continuing to help the company fund its development, its growth, all the way through to potentially participating in a significant way in the capex development when we go into production. But they'd actually pointed out that in order to do so, we needed to be on the ASX so that we could be eligible for their larger sort of main core funds. So what we've announced today is that we're looking to raise between 10 to 20 million. Regal will be maintaining it pro rata of their current shareholding at 15%. And then we have a number of other leading Australian institutional funds who have expressed their interest to come into this raise. And then we're working with a number of retail brokers. But we're principally working with CLSA. For those that don't know CLSA, it's now the world's third largest investment bank. It's based in Hong Kong. It is significantly or entirely owned now by CITIC, the large Chinese group. And Steve, do you just want to comment as to why we ended up with CLSA and their relationships in Asia and their retail distribution out of Hong Kong?
Yeah, CITIC, I say, is the third largest investment bank in the world, and CLSA is the broker in Australia. Now, we were looking at a number of brokers, some very, very good firms in Australia, but we chose CITIC because we can see going into the future the access into many of the companies in the battery supply chain, not just in China, but in Japan, Korea. CITIC has reach into all of them. So we have the potential to work on strategic partnerships into the future. Now, since signing on with CLSA, we already have one party that they've introduced who are interested in the company. They're in the data room actually now. And the other area for them is they've got good access to wealth funds and high net worth individuals in Hong Kong, Singapore, Malaysia. So they'll be tapping into those markets during this fundraise as well. And down the road, as we're looking for debt financing for the project, CITIC is one of the biggest banks in the area providing the construction finance. And we believe that working with CLSA on this particular deal will give us good entry into good relationship with CITIC into the future.
So just to clarify for the audience today, we've lodged a prospectus today. One of the idiosyncrasies between London and Australia is we can't halt trade in London. So when you lodge your prospectus on the ASX, you have to lodge it. You go through what's called an ASIC review, which is a Securities Commission, and then we have to go through the Australian Stock Exchange review period, which can only happen after you lodge. And as part of the conditions precedents to get the deal away, we have to call an EGM and get shareholder approval for the deal. So the current graphic there outlines the timing. So we're expecting to actually be on the exchange towards the end of September. We appreciate it's going to be slightly disappointing for everybody that we're doing a slight down round. When we started, we were sort of back up at 24, 25, but then with the recent issues in Japan, the market moved away and lithium still stays suppressed, which has got a bit of a drag on all of the lithium companies out there. But fundamentally, the benefit to all shareholders will be to continue the current pace of development of the assets, and to push forward with both the current works that we're doing on the downstream in terms of getting the lithium and progressing forward to getting the PFS away and then onto the DFS. So I think it's going to be highly beneficial for the company in terms of broadening to a much wider institutional, but also retail base in Australia. Just as a quick aside for the audience, Steve, I mean, you and I have discussed it many times, but there's what, four or five lithium companies on the LSE. There's about 36 on the ASX. When I do my searches, I could find about 5 or 6 analysts in London covering the sector. When you look at all the analysts covering the range of ASX companies, there's actually something like 86 different analysts between Australia, Asia, Canada, and the US covering the Australian lithium sector. So one of our hopes is that we will start to get a lot more institutional analyst coverage, because they'll have to as part of the peer group analysis, and that will have further enhance the company's investor reach and hopefully add to a share price appreciation. So one of the other questions we've been seeing is, this is an Australian-focused placing onto the Australian Stock Exchange. So what we actually issue is what's called CDIs, which are certificates of depository interest. So shares will be lodged with Computershare in Australia, and the way it works in Australia is you get a digital certificate which represents your interest. Now it has been through the various verifications and clearances to go internationally to qualified institutions in Asia, into Europe, into North America, and into the UK. And there were some comments on some of the chat rooms about disenfranchising existing shareholders, and the company's really gone out of its way to try and to avoid that. So while a private individual is not able to subscribe, a broker in the UK is able to subscribe. So if there are any shareholders that wanted to participate, they can contact their broker and take independent advice from their broker. This, by the way, I want to be clear, is not a solicitation or an offer to market the securities, but qualified institutional investors, which does include UK brokers, can put a bid into the book as we're building it over the next sort of week or so. And there is an ability for those institutions to settle via Crest. But again, that is something that investors should talk to their financial advisors about and take advice directly. But that is something, if anyone wants any clarity on that, they're more than welcome to give me an email. So hopefully we'll be in a position to give a very positive update about that in the very near future. Steve, is there anything else you think we should comment on that, on today's major announcement?
No, I think people have been expecting it. It's been delayed, but it's very good that we are on the way, and it'll be good for everybody, including our UK shareholders, that we will be ASX listed, and we hope that we'll see our share price re-rating closer to that of our peers on the ASX, which will have beneficial impact on our London shareholders.
Steve, we started to get some questions coming in on the Q&A, and we'd welcome everybody to put any other questions that they'd like to be addressed at the end coming up. But there's one just come up from Rajar about why shareholders being constantly diluted with share issue anymore. And if I may, Steve, I'll just address that if I can now. Obviously, with all junior mining companies, as they develop, they need to raise capital. The company is not revenue producing until it goes into production. So it's always been anticipated that as the company goes through its drilling campaigns and then goes through the pilot plant, that there will be a requirement for further capital. Now, this funding will take the company all the way through the PFS, and with some of the warrants outstanding, it is anticipated that this will be the last equity raise. After this, we will then be in a position to start negotiating with strategic offtake partners in terms of doing construction and development financing. And as we just alluded to earlier, part of the reason for working with CLSA and their relationship with their parent CITIC is to then be in a position to start having conversations about debt financing. So The anticipation is that this will be the last equity raise that we will need to do. Obviously, markets can change, the lithium price can change. And obviously, at this point in the company's development, we are very much dependent on the overall commodity price and the market sentiment. So it is a disappointment to all of us that we're not able to do this at a higher price. However, the overriding priority is to make sure that the company is fully funded to take us through the next key milestones in getting us into being a producing company with revenue rather than a development company. Steve, is there anything else you want to add? Otherwise, we can just jump on to the RNSs.
Yeah, sure.
So since we last spoke, we did do an operational update. We didn't have a chance because we were traveling to go on, but obviously we've had further great results coming out from the pilot plant. Maybe if you want to just have a chat about that and the lithium market.
Yeah, let's stay with the lithium market first, because obviously, people have been seeing the price dropping to where it is today, the $11,000 a ton. We keep saying that that's not important for us now. What we need to see is the price when we're coming into production, and every analyst out there is saying, look. For projects to get financed and coming into production, it needs an incentive price more like $20,000 to $25,000 a ton to make those projects have a reasonable return for those investors. And what we're seeing today at this price is production beginning to come out of the market and projects being delayed. Now, we've just seen in the last week, discussions on projects in Australia, the spodumene projects, mines like Mount Catlin considering stopping production because they are uneconomic. We've seen lithium hydroxide plants being suspended from development in Australia. Even in Argentina, we've seen Arcadium slow down the development of some of its brine projects and cancelling the spodumene project in Canada. So this is happening. All these companies are hurting with today's pricing, and projects are being delayed and will continue to be delayed. And what's happening is on the demand side, there's very, very strong demand for electric vehicles in China, but it's been slower than expected in the United States and the EU, because the man in the street is still saying, the cars are too expensive. And every motor manufacturer is now working out how they can get cheaper vehicles into the mass market. And one of the ways is to use what's known as the LFP batteries, which need what we make is lithium carbonate. So there is going to be a sort of switch round to put these cheaper vehicles into Europe and the United States to make them affordable, and that is going to lead to an acceleration in demand growth into the future. So we're in this process of equilibration between supply and demand. But the prices today cannot be sustained into the future. They must go up. I was just looking at one broker, Wilson's, this morning in Australia, that was talking about the sense in Australia that the market is weak, but the conclusion is sunny times are coming. They must come into the future if the world is going to get the lithium to drive the electrification of vehicles. So today is today. We're looking at what is the price in 2027, 28 when we're into production.
Steve, on that note, that analyst actually is a gentleman called, let me spell it properly for everybody. Sam, I saw it as well, funnily enough, and I read it this morning. Sam Catalano, who used to be with Canaccord in London. He's now the head of mining research for Wilson's in, I think, on the Gold Coast. But he's available on LinkedIn, and his article about the state of the market and where they see pricing is also available on LinkedIn for anybody. So once again, that's Sam Catalano, Catalano. LANO. But again, it was a very, very interesting piece. And actually, we had a really good response in the press today from picking up from a VSA and from people such as Investors Chronicle and Vox and a whole bunch of others really reported quite positively on today's ASX announcement. Right, so that's where we were on the. I've got a question actually. I think we'll deal with from Greg J now, just about where we see the company's valuation when we get to production. But on that note, Steve, one of the things that everybody remarked about, and one of the things that everybody thought was very positive, is that we're right at the bottom of the cost curve. So even though prices are currently around between sort of 11 and 12,000 over the last sort of few weeks, our all-in cash costs are estimated to be something around about 7. So even at today's prices, we'd make a lot of money. But Greg's question was, where do we see the current share price when it gets to production? And Greg, that will be very much a function of where the lithium price is. If in 2 years' time we're back at where most analysts are forecasting the long run pricing to be at around about 22, 2.5, we should be something in around about a couple of pounds. If it's something where we are today, you'd be realistically something between sort of £1.25 and £1.50. But it's all going to depend on obviously where the lithium price is when we start to actually generate cash flow and revenue. Right, Steve, shall we move on?
Yeah, one thing we talk quite a lot to analysts and institutions in Australia was the direct lithium extraction technology which we are applying in Chile, because there's still a little bit of reservation about that. But we've been able to go out and say, look, we have a pilot plant. We've demonstrated that it's working very, very well on our brines, and we've been putting results out into the market. As you know, in previous discussions, we said we've split the pilot plant in two. We have the front end, the direct lithium extraction and concentration of that eluate by reverse osmosis to about 2,200 ppm. And this is the newer part of the process. It's demonstrating that the DLE can efficiently absorb lithium and leave the impurities behind. And then the downstream is much more well known in the industry. It's how to go from a lithium chloride solution and precipitate lithium carbonate battery grade. Many people do that, SQM, Albemarle, Olaroz, and there are existing plants up and running in the world. There's a number in the United States, Saltworks, Conductive Energy. We ended up signing an agreement with Conductive Energy to use their plant in Chicago to treat our material. And I'll talk a little bit about that just now. But the results we've got are actually very, very good. When you consider the evaporation ponds have a lithium recovery of about 40 to 45%. Now, we've demonstrated with our DLE plant that the recovery of lithium from the brine onto the adsorbent is about 95%, and the recovery into the eluate is very stable at about 88%. And this is the typical graphs that we're getting after multiple cycles. So 88% recovery compared to 40 to 45%, much more efficient, as well as all the other benefits of using DLE rather than the evaporation ponds. But what we've also demonstrated, we just advance, is that the adsorbent which we're using, which is one by a Chinese company, Lanshen, we found it's the best of all the adsorbents we've tested from all around the world, that apart from the high recovery of lithium, there's more than 99% rejection of the major impurities, the calcium, magnesium, sodium, potassium, which form the bulk of the brine. There's tiny traces of calcium and magnesium and a bit of boron that gets through, because the boron is similar in size to the lithium. And so what we're demonstrating is that the adsorbent is performing its task as a purification step in the process. Very efficient at absorbing lithium and very efficient at rejecting impurities. So the lithium chloride eluate, pretty clean, that we make in Chile, we then ship to Chicago. I had just had an update with our team meeting this afternoon. We now have 2 containers. Each of these have got a big flexi tank, 22 cubic meters inside the container. 2 have now arrived in Chicago, and 2 are on ships at the moment on the way. And the process from here is that our eluate is then concentrated further by forward osmosis to about 20,000 parts per million lithium. Then the use of ion exchange to remove the final traces of calcium, magnesium, and the boron. And then it's the use of sodium carbonate to precipitate lithium carbonate, which is battery grade. And we sent a sample, a large sample of our eluate to Chicago by air freight some time ago, so that they could set up their pilot plant ready for the big shipments to arrive. And these are the results which we have got. I'm not sure we've got it here. Yeah. So we've demonstrated that conductive energy are getting 99.75% purity of lithium carbonate in their setup procedure. These are the 4 containers that we've sent with about a ton of lithium contained as lithium chloride. We'll be starting to process this during the course of September and into October, and we'll be producing these larger quantities of battery grade material, which we make available to potential off-takers and strategic investors. And just to remind everybody, this is very, very important, because there's no standard specification for lithium carbonate. Every cell manufacturer and battery manufacturer has its own slight requirements in impurity levels, and they need to test the material which they're buying in their process, and they do it in a number of stages. They want kilos, first of all, which we can deliver from this first production. So they want to analyze the chemicals and the impurities. Then they want tens of kilos to look at the physical characteristics of the precipitate. And finally, they want hundreds of kilos to put through into their test cells to demonstrate that the material is suitable for their process. So certainly we're going to have a lot of material, even from this first stage, to go through the first stages of chemical and physical characterization. And then as and when the off-takers want larger quantities, then we can run as much as they need. But at least we'll have this process underway during September and October.
And on that note, Steve, Toby M had asked about the off-takers. So I think, Toby, there's many parties, so we're starting to engage with the first ones, and then there'll be an ongoing process over a number of months as they go through the processes that Steve just outlined. So it's not like there's a one to go to there. I've got a follow-up question from Raj, but Raj, I'll come. Well, actually, Steve, on that side, I don't know if you can also just see Steve on the Q&As, but we'll just do with it in turn. Raj's coming back and asking when we foresee production, Steve, so we can give a little update of what we outlined for the next maybe sort of 24 months. And Raj, I mentioned the break even is $7,000, not £7,000. Current pricing is around about 11.5, which the entire industry now believes is the bottom. Your question about what if it falls below the break-even point, we are in the middle towards the bottom of the lowest quartile. If prices were to maintain below at 7,000, everybody who's in the other 3/4 of the world's production would be forced to shut down. You would then have a decline in the amount of lithium production globally, and prices would recover. It would be implausible that lithium would get below $7,000 a ton. You just have no supply. There would be no economic incentive for most of the market. And even at today's prices, you've seen the higher cost producers. Well, actually, I'll defer to Steve, because Steve has a more active following. But At today's current prices, we have seen a number of the world's current producers either delaying, scaling back, or bringing back in some of the production. Steve, do you just want to touch on that for me, please?
Yeah, I did that a bit earlier. No, there's quite a lot of press coverage in Australia saying that these prices are going to hurt the Australian producers because they're already starting to look at projects which are losing money at this price. With the price of for them it's the spodumene concentrate, which they were selling some time ago at $3,000-4,000 a ton. It's now down to less than $900 a ton, which makes quite a few of those mining operations uneconomic. So there will be production coming out of the market, and at some time in the next year or so, there should be a balancing taking place, getting to a price which is going to be able to deliver cheap batteries for the vehicles, but still make it profitable for the mining companies to operate. Now, where that's going to be, we think it's going to be the $20,000 to $25,000 a ton range. There's quite a number of industry analysts are looking at getting back to that, overshooting that, getting back to the $30,000 a ton in the sort of 2026 to 27 time frame. But long term, we're using $22,500 a ton.
Now, on your current expectations, when realistically do you hope the company to be into production?
Well, a lot of this depends on the permitting, but we're looking at completing our pre-feasibility study at the end of this year, rolling that into the DFS next year. And with the results of the PFS, with the demonstration that we're making good quality battery grade lithium carbonate from the pilot plant and able to deliver to off-takers, we'll be looking at developing off-take agreements and bringing in a strategic partner to invest at the project level during the course of next year. We'll be looking at filing the EIA based on the configuration of the pre-feasibility study early next year, and then working with the government on the permitting, which we believe we can get the environmental permits to proceed to construction middle of 2026. And this is the thing which is a bit of a variable. It's been taking longer than that for a number of mining projects in Chile. In my early days in Chile, we were doing the environmental impact assessments and getting permits in 6 months. It's been taking longer. But the government has recognized that. They've been having a discussion with the other mining companies in Chile last year, when the government increased the royalty rates on mine production. And the reaction of the industry was say, look, we don't like it, but we'll do it. But you must do something about streamlining the permitting process. The president came back and issued a paper and said, here are the 21 areas that the government's going to look to streamline the permitting process. The governor said they want to have new lithium projects in production 2026. They can only do that if they work on the permitting and accelerating that. So we're looking at middle of 2026 to start construction, and we can be into production at the end of 2027. Now, the government want it earlier than that. We're saying, look, we can try and do that, but you must come good with your promise to speed up the permitting process. So we are the most advanced project in Chile. There's nobody else can work as fast as we can. Nobody else has really done any exploration, let alone feasibility studies or put a pilot plant in place. We are by far the most advanced at potentially meeting the government's objectives. And the first part of that is this. It is the operating contract. Every new project in Chile requires the operating contract. We started the administrative process in April, where the government asked for expressions of interest from companies that wanted to develop any of these 26 salars, which are open to the private sector. They received 80-odd expressions of interest. They put the results out of that in July. And by the end of this month, the end of August, they will announce the mechanism for award of the operating contracts and the criterion they're going to be using to award those contracts. And they're going to be very careful because many of these lithium deposits already have mining licenses on top of them, and the mining licenses give rights in terms of easements and the right of using water, and the government wants to make sure that there's no potential for litigation between the owners of the mining rights and those who are going to be granted the operating contract. And we're in a very good position, is that we've obtained the mining licenses over the complete basins of both Laguna Verde and the Viento Andino projects, and we have all the knowledge. And the last thing which the government is concerned about is, before awarding the contract, is can the company demonstrate community support for the project? Because if they don't have community support, the projects won't proceed. And as we've seen, there's been friction in the Salar de Atacama with Codelco negotiating with SQM and getting into community dialogue, and there are concerns there. But as we've shown, we engaged with our communities right from the start of the project. We've taken them with us, shown them what we're doing in terms of the DLE technology. They've seen our work in drilling and pumping. They've been in the laboratories, they've been in the pilot plant, and they stand up and they tell government that from what they've seen, they know every project does have an environmental impact, but the technology that CleanTech Lithium is bringing into the country has the minimum impact, and they commend the government to work with CleanTech Lithium to advance lithium production as soon as possible. So they're on our side. They bang on the door of the Ministry of Mines and saying, look, Region 3, it wants jobs, it wants investment. The indigenous communities recognize they will get benefits from a trust fund, from the royalties we're going to put into our operating contract. Everybody in the region is wanting to move forward fast with this project. So my expectation is that at the end of August, the government will announce their mechanism, whether there are multiple bids on a particular lithium deposit, and it will go into a licitation process. We believe, because we're advanced, because we have the mining licenses, because we have community support, there's potential expectation to just go into direct negotiation with government on the terms of that contract. But we'll have to wait and see what comes out at the end of August.
Steve, I'm cognizant we were going to try and keep this down to 40 minutes, so thank you for that. So we're hoping for an update on the sales by the end of August. We'll get further developments on the downstream and the lithium, hopefully in September, and then we have the PFS to drive us at the end of the year in terms of being a major milestone, and then obviously onto the ASX by the middle to the end of September, depending on the ASX review period. It's usually 2 weeks, but it can be 3 weeks, so that's why I'm hedging it slightly there. It's out of our hands, but that we hope will bring then a lot broader group of retail investors and analyst coverage. Very lastly, just to address this, 2 questions. Lance from our Telegram group had asked us for a very quick update on where we are in the search for a new CEO.
Yeah, no, we engaged a search firm, Heidrick & Struggles, out of Australia, some time ago. They have extensive database and resources in terms of identifying people who meet our criterion for developing our lithium projects in Chile, and also being able to be the front of the company in front of the investor community, both in London and increasingly in Australia. So they've got a candidate profile. We've been through all their lists of people. We identified a short list of 4 excellent candidates. We've had team meetings with all 4 of them. Whilst in Australia in the last 2 weeks, I've met all 4 of them with Tommy McKeith, our resident Australian director, as well. And we are in the process of shortlisting our 2 favoured candidates to meet the rest of the board, so that we would like to be in a position to make an offer in the next few weeks. So I think they're all very excited. They see the future of CleanTech Lithium and the space we're in terms of having these projects in Chile and being listed on the ASX and being able to see the sort of re-rating share price and getting some excitement going in the Australian community for what we are doing in Chile. So I'm sure that they will be on board very, very quickly. And when they are, as I say, I will step back to, rather than doing 2 jobs as executive chairman and interim CEO, I'll go back to executive chairman for a while until the new CEO has got his feet on the floor and hands on the tiller. And then I will eventually step back, as the ASX and AIM would like, into a non-executive chairman role.
Excellent. So very much hoping to have an announcement, say, within the next sort of 4 to 5 weeks about that role, subject to acceptance.
Yep.
Yeah. Okay. Great. And then very last question. So we did have one last question from Andy, and where possible, we try and address all of them. So Steve, if you jump in if you want to, but otherwise I can address this one. So what are the costing of floating on the Australian Stock Exchange? Andy, usually it's a lot less than going into London. The costs are in the prospectus. I don't want to give you an exact figure right now. The ASX part actually is relatively cheap compared to other exchanges. It has been a slight cost to the company because obviously we have to abide by UK rules and regulations in terms of our London listing, and then being a Jersey company, we have to abide by certain elements of the Jersey financial services requirements. So it's been a lot of back and forth between different jurisdictions, which is one of the reasons why things took a little bit longer than had been anticipated. But the main point of your question there is how this extra volume shares dilute the value of the shares on the LSE. An increase of the number of shares obviously will dilute the potential value to shares of the overall income coming in the future. However, in terms of the immediate value to the shares, I think it will be positive and enhancing to the valuation, because the biggest risk in any exploration and development company is financing risk. And so the ability to go onto the ASX and to have a broader and deeper pool of capital allows the company to move forward with its current objectives. And secondly, the valuations on the ASX are significantly higher. A back of the envelope sort of number is we're trading at approximately 1/3 of the average of the peer groups on the ASX. So we are hoping for a significant increase in the valuation. Not immediately, it will take some time. But also by being on the ASX, we're expecting to get a lot more analyst coverage. There's something like, I think, 7 or 8 analysts that cover a company called Lake Resources, which is a similar DLE focused company in Argentina. But if you're going to write about Lake, you're going to have to write about CleanTech Lithium. So in terms of the valuation, we're doing this because we think it's going to be positive to all the shareholders going forward, but particularly to our current shareholder base in the UK by doing this financing. Otherwise, we wouldn't have proceeded down this route. Steve, last question here. So how many car manufacturers have shown interest in getting sample quantities of lithium? And then we really must wrap it up. But very quickly, Steve.
Yeah, we've got. I think we've had the eighth company has expressed interest, signed NDAs, and are in the data room. The reality is that we have not gone out to approach all the potential car manufacturers and battery manufacturers until we have all the information be in a very good position. I've always said that we're in the strongest position to engage substantially with potential off-takers is when we have the pilot plant demonstrating that the DLE works on our brine and we have battery grade material to provide to them. We have the PFS, which is complete, demonstrating the value, because then we start to talk to strategic investors about coming into the project at a price which is related to the NPV of the project, not to where it is today, which is to the depressed market capitalization of the company. We want to be in that stronger position. And third is having the operating contracts from the government. With all those three in place, we're in a very strong position, which is to provide material, as we will be doing, to Asian companies, but also to the EU and the US companies. I've had discussions in the past with BMW, who are very keen on securing some supply. But they've always come to me back, look, I can't go back to my board and really have serious discussions until you can come along with a PFS, and then we can analyze your project and see whether you're worthwhile investing in. So that's usually with these large companies, the minimum requirement you need to get in the door is having a robust PFS and your operating contracts in place. And we're going to be at the end of this year, I believe, in that position, which is a very strong one. And particularly now with being ASX listed, I think there's going to be good opportunity for investors to see the value of the company increase very dramatically over the course of the next 6 months or so.
Thank you very much. So just in summary there, so there's 8 currently, but there are dozens of other companies that we're aware of that we're going out to, and already by working with CLSA, I know that they are starting to have early conversations with a number of other potential parties that once we get this ASX listing away, we'll also start to have initial conversations with. So Steve, as always, thank you very much for your time. I know a lot of effort has gone into marketing and getting this away, but I think it's really going to be very, very positive and shareholder accretive in terms of valuation for the company. And now that we're back, and now that we don't have a problem of being asked awkward conversations, or sorry, awkward questions, we'll get back to doing regularly sort of bi-weekly or tri-weekly updates to our shareholders. Thank you very much. With that, back to you, Mark.
Fantastic. Thank you very much indeed for taking those questions throughout today's meeting. Of course, any further questions that do come through, you have the ability to review those, and we'll publish responses where appropriate to do so. Thank you both for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure it'll be greatly valued by the company. On behalf of the management team of CleanTech Lithium PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and good evening to you all.